Hey everyone, welcome back. Today we're taking a deep dive into something pretty interesting, the Indo Equipment Limited IPO. I know you've been thinking about investing in this one.
Yeah, looks pretty promising.
Yeah, and we've got some great excerpts here from a financial website to help break it all down for you.
Should give us a good overview.
Yeah, so by the end of this deep dive, you should have a much better idea of, if this is the right move for you.
For sure. And this IPO is coming at an interesting time, right? Global demand for agricultural equipment is going up, 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 especially in developing economies.
Yeah, that's a good point.
So that could be a real advantage for Indo-Farm equipment.
Yeah. And they're not just sticking to tractors either. They're
Yeah.
branching out, making cranes, other harvesting equipment.
Yeah, seems like they're trying to, cover all their bases.
Yeah, they operate under two brands, Indo Farm and Indo Power.
Yeah, I've seen those around.
Probably seen them out in the fields, yeah.
Definitely. And they're not just focused on the domestic market either.
Oh,
They're already exporting to Nepal, Bangladesh, Myanmar. Smart move, spreading the risk a little bit, you know?
oh, for
If one country's economy hits a rough patch,
Yeah.
they've got other markets to fall back on.
Diversification. That's the key takeaway there.
Absolutely.
All right, so let's get down to the nitty-gritty, the IPO details, right?
Yeah, what do we got?
Opens December 31st, 2024. Closes January 2nd, 2025.
Quick turnaround.
Yeah. Then it's set to list on January 7th, 2025, so not too long of a wait there. And it's going to be listed on both the BSE and the NSE,
Okay, so that's,
the Bombay Stock Exchange and the National Stock Exchange.
right, the major exchanges in India.
Exactly.
So that's usually good news for investors, right?
Yeah, definitely. More liquidity, wider investor participation, all that good stuff.
Makes it easier to trade, too. All right, so what about the price?
So they set the price band at 204 to 215 per share.
Okay, so that gives you a sense of, what the market thinks the company's worth.
Gives you a ballpark.
Yeah. And the minimum investment for retail investors like yourself is $14,835.
Something to keep in mind.
Definitely. Can't jump in without knowing that. All right, so how are their financials looking?
Okay, so this is where I started to get a little hesitant.
Oh,
So the data shows their revenue and profits were pretty flat between 2023 and 2024, increased by just 1% each. Yeah, I know. As of June 30th, 2024, their revenue was 75.54 crore, and their profit after tax was 2.45 crore. Not exactly setting the world on fire.
yeah, you got to wonder what's going on there.
Right.
Could mean they're not growing as quickly as they could be, or could be a sign of stability, dependable but not flashy.
Yeah, true.
I think the key is to see how that compares to the rest of the industry.
Yeah, good point.
Were there any external factors, like maybe a global economic slowdown that impacted the entire sector?
Could be.
You'll want to see what the company's own explanation is for these numbers, too.
Definitely. And there's something else here that kind of raised a red flag for me. Their debt-to ratio, 18.82 as of June 2024.
Okay, so for anyone who doesn't speak finance, what does that tell us?
Well, basically, it's how much debt the company has compared to its earnings.
Okay, so that high of a ratio,
Could mean they're relying heavily on borrowing to, keep things running.
not necessarily a good thing.
Right.
Kind of like if you had a ton of credit card debt compared to your income.
Yeah, makes it hard to make ends meet.
Exactly. Now, it doesn't automatically mean they're in trouble, but it's definitely something to dig into. Compare it to their competitors.
At least how they stack up.
Yeah, and see if they've got a plan to pay down that debt.
Good news is they did mention using some of the IPO proceeds for that. So,
So they're aware of it, at least.
yeah, taking steps to address it.
Mm.
Now, let's talk about their growth plans because there's some interesting stuff here. They're investing in a new manufacturing unit for pick-and-carry cranes,
Pick and carry cranes, what are those exactly?
planning to increase their production capacity by 3,600 units per year.
Wow, that's ambitious. But it's a smart move if you think about it.
How so?
Well, construction and infrastructure, those industries are booming, especially in developing countries.
Yeah, a lot of growth potential there.
Exactly. And these pick and carry cranes, they're perfect for those kinds of projects. Smaller, more mobile, can fit into tight spaces.
So Indo Equipment is basically betting on that demand continuing to grow.
Sounds like it. And if they can pull it off, it could be a big win. But of course, there are always risks.
Always, yeah. Demand might not meet their expectations. Could be production delays, cost overruns, the usual suspects. And don't forget about the competition.
Oh, right. Got to factor that in. What's the competitive landscape look like?
Exactly.
Who else is out there making these kinds of cranes? How do they compare? Price, quality, features, all that.
Lots of research to be done.
For sure. Now, can we circle back to the financials for a sec? That debt-EBITDA ratio is still bugging me.
Yeah, no, it's definitely something to keep an eye on.
Can you break that down for someone who's not a financial whiz?
Sure. So EBITDA, that stands for earnings before interest, taxes, depreciation, and amortization. It's basically a measure of the company's core profitability,
Okay, so it's kind of
like their operating cash flow.
gotcha.
And the debt-EBITDA ratio compares that cash flow to their total debt.
So a high ratio means they've got a lot of debt compared to their earnings.
Exactly, which can be risky. It depends on the industry. Some industries naturally have more debt,
Right, gotta look at the context.
but it's good they're planning to use some of those IPO proceeds to pay down that debt.
Yeah, at least they're taking steps in the right direction. All right, so we've covered their expansion plans, financials, competition. What does all this mean for our listener who's thinking about investing?
Well, we found an analyst review by Dilip Davda. They seem to have kind of a neutral stance on the whole thing.
Okay, so not overly positive or negative.
Right. They acknowledge the company's strengths,
Yeah.
the integrated setup, expansion plans.
But they're also not ignoring those red flags.
Exactly. The flat financial performance, the high debt ratio, they even suggest the IPO pricing might be a little aggressive.
Interesting.
Yeah. They're recommending the IPO cautiously, mainly for long-term investors who've done their research.
So there's potential there, but it's not a slam dunk.
Definitely not. And remember, this is just one analyst's opinion. Always want to do your own research, get a broader perspective. What other sources do you think people should check out?
Well, looking at the competition is always a good idea.
Yeah, see what they're up to.
How do their financials compare? Are they expanding too? And industry reports, financial news websites, those are always good resources.
The more information, the better.
Absolutely. You want to be as informed as possible before you make a decision like this.
Couldn't agree more. So we've covered a lot of ground here. Company overview, IPO details, financial performance, even an analyst review. I think it's time for a quick break. We'll come back and explore some of these points in more detail, especially that pick-and-carry cranes expansion. Sounds pretty fascinating.
Definitely a lot to unpack there. All right, welcome back. Glad we're taking a closer look at this IPO. Investing is a big decision, and it's important to really understand what you're getting into.
Yeah, for sure. I know one of the things that caught my eye was that pick-and-carry cranes expansion. It seemed kind of like a niche market to me, but I guess they're seeing something there.
Well, it's not as niche as you might think. Those cranes are pretty versatile, They're smaller than your typical construction cranes, so they can maneuver in tighter spaces. Plus, they're mobile. They can move around a construction site easily or even between different locations.
Oh, I see. So they're kind of like the Swiss Army knife of construction equipment.
Exactly.
Okay, but why are they so important to Indo Farm Equipment's overall growth strategy?
Well, you got to think about the big picture, right? We're seeing rapid urbanization all over the world, a huge focus on infrastructure development. Everyone's looking for more efficient construction methods.
Okay, yeah.
And these pick-and-carry cranes, they fit right into that. They can be used for all sorts of things, loading and unloading materials, placing heavy components, you name it.
So Indo Farm Equipment is basically banking on that demand continuing to grow.
Pretty much. And if they can increase production to keep up with that demand, it could be a real moneymaker. But of course, no investment is without risk.
True.
There's always a chance the demand won't be as strong as they're expecting. Could be production delays, costs could go up.
Yeah, all those fun things.
Exactly. And we can't forget about the competition either.
Oh, right. There are definitely other companies making similar cranes.
So that's something you'll want to research. Who are their main competitors? How do their cranes stack up? Quality, features, price, the whole 9 yards.
Okay, yeah, good point. Now, can we go back to those financials for a minute? That debt-EBITDA ratio, that's still kind of sticking with me.
Yeah, it's definitely something to pay attention to.
What does that even mean for someone who's not, a financial expert?
Okay, so EBITDA, that stands for earnings before interest, taxes, depreciation, and amortization. It's a way to measure the company's core profitability from their operations.
Okay.
So you can think of it like the company's operating cash flow.
Right.
Now, the debt-EBITDA ratio, that's comparing that operating cash flow to the company's total debt.
Gotcha. So a high ratio
Means they've got a lot of debt compared to their earnings.
Right, and
That's not ideal. It could mean they're taking on too much risk.
Okay.
But remember, context is key here.
Oh, yeah.
You need to compare the ratio to the industry average. Some industries just naturally have higher debt levels than others.
That makes sense.
And it's good that they're planning to use some of the IPO money to pay down that debt, so that's a positive sign. Shows they're trying to manage things responsibly.
All right, so we've talked about their expansion plans, their financials, the competition. What's the takeaway for our listeners who are, seriously considering investing in this IPO?
Well, you always have to remember that investing comes with risk. There's no guarantee that this IPO will be a home run.
Yeah,
But Indo Farm Equipment seems to have a solid foundation, a clear strategy for growth, and they're tapping into a market with a lot of potential upside.
so it could be a good long-term investment,
Potentially, yeah.
Yeah.
But you got to do your due diligence.
like we always say.
Don't just take our word for it or even that one analyst's opinion. Look at the company's financial statements, read some industry reports, compare them to their competitors, really dig in and see if this investment makes sense for you.
Great advice. And remember, investing is a marathon, not a sprint. It's all about making informed decisions that align with your goals and your risk tolerance.
Absolutely. Before we wrap up, though, I think it's worth going back to those flat revenue and profit numbers one more time.
Oh.
I think it's important for people to really scrutinize the company's explanation for that trend. Were there external factors that might have affected the entire industry, or were there internal issues, maybe some strategic decisions or management changes that impacted their growth? You want to make sure their explanation makes sense and lines up with what you're seeing from independent analysts.
That's a good point. It's easy to get swept up in the excitement of a new IPO, but you got to stay critical and ask the tough questions.
And we're back for the final part of our deep dive, Indo Farm Equipment IPO. Hopefully you've stuck with us and gotten a lot out of this so far.
Yeah, it's been quite a journey. We've talked about everything from expansion plans to financials to competition to, what the analysts are saying.
A lot to cover.
Yeah.
And of course, we're just scratching the surface here. You always want to do your own homework, dig into the details before making any big investment decisions. Right, exactly. Nobody knows your financial situation and your goals better than you. You're the CEO of your own portfolio. But I think one of the big takeaways here, one of the things we keep coming back to, is really understanding the context of the company's performance. Those flat revenue and profit numbers.
Right, right. You mentioned looking beyond just the numbers themselves and trying to figure out, the why behind them.
Exactly. Were there external factors at play, something that was affecting the entire agricultural equipment industry? Or were there internal challenges, maybe some strategic decisions they made, management changes, things like that, that could have impacted their growth during that specific period?
Yeah.
You want to critically evaluate their explanation and see if it lines up with what you're seeing from independent analysts and industry reports.
Okay, so it's like being a detective, piecing together all these clues to get a clearer picture of the company's financial health and growth potential. And you also mentioned comparing Indo Farm Equipment to their competitors, right?
Absolutely. How do their financials stack up against the rest of the industry? Are they outperforming the average or are they lagging behind? That can give you some really valuable context and help you determine if the IPO pricing is reasonable or maybe a little too optimistic.
Okay, yeah, that makes sense. We've talked a lot about the risks, which is super important, obviously.
Right.
But let's not forget about the potential upside, right? Indo Farm Equipment, they seem to have a strong foundation, ambitious growth plans, and they seem to be, tapping into a pretty lucrative market with those pick-and-carry cranes.
Yeah, they've definitely got some things going for them. If they execute their plans well, manage the risks effectively, this IPO could deliver some pretty significant returns for long-term investors. But, we can't predict the future.
Yeah, nobody can.
That's
It's always a good idea to diversify. Even if you believe in Indo Farm Equipment's potential, you don't want to put all your eggs in one basket.
Absolutely. That's investing 101. Spread your risk across different asset classes, different sectors, build a portfolio that can weather the ups and downs of the market.
So, bottom line, for our listeners who are thinking about investing in this IPO, what's the final word?
Well, I think it's a unique opportunity, but it's definitely one that requires careful consideration. Hopefully, we've given you the information and the tools to start your own investigation.
Yeah, do your homework. Dig into those financials, read the analyst reports, understand the competitive landscape, and most importantly, figure out if this investment aligns with your own personal financial goals and risk tolerance.
Couldn't have said it better myself. Remember, investing shouldn't be an impulsive decision. It should be a well-thought-out process.
That's a wrap on our deep dive into the Indo Farm Equipment IPO. Hope you enjoyed the ride. Knowledge is power, especially when it comes to your hard-earned money.
Happy investing, everyone.